Ladies and gentlemen, we have just got some new shocking news and some new shocking information that shows that the crisis that started with Evergrande in China is now starting to spread to other industries as defaults in China have just hit record levels. But in today's video, I'm going to go over specifically what happened to Genting Hong Kong, a company that dropped 56% today, and I'm also going to go over how China's stock market has just hit a critical level. Because we can't take our eye off what's happening in China right now, because when they cough, the world catches a cold. So everyone, let's not waste any time. Let's get straight into the news, the facts, and the data. Look at this everyone. Shares of cruise operator Genting Hong Kong plunges more than 50% as it warns of default. And I'll bring up a chart here of their stock price and we can see how much they have got hammered today. Now, for those of you that don't know, Genting is a cruise operator based in Hong Kong. And what happened to cruise lines over the past 2 years? Well, they have got absolutely hammered. Now starting to see the results of what happens when you shut down the tourism and cruise line industry. We're going to see more companies go under just like them. As it resumed trading following a 4-day halt, Genting said in a filing to Hong Kong Exchange, there's no guarantee that the group will be able to meet its financial obligations as and when they fall due. So I guess this is them pretty much admitting that they're going under. It came as German shipbuilding subsidy MV Werften filed for insolvency, which sparked a warning by Genting that there could be potential cross defaults on financing arrangements worth 2.8 billion as a result of the insolvency. Isn't good everyone. I literally can't keep up with the amount of companies that are defaulting or going under in the Chinese region right now. Because look what's happening everyone. Offshore defaults of Chinese corporate bonds have surged to a record in December. And I'm just waiting to see on the new data. We can see here it is now approaching $4 billion, its highest ever on record. The cruise operator controlled by Malaysian tycoon Lim Kok Thay has been hit hard by the pandemic as travel hit a standstill due to global COVID cases rising. And this is what I've been pondering everyone. I've been wondering, how can they shut down the global economy and especially the tourism industry for nearly 2 years now and there be no casualties? Well, we are now starting to see the effects of these lockdowns have had. And also, even if there's no more lockdowns, we're still seeing consumer sentiment and consumer confidence is falling. With cases absolutely skyrocketing right now, some businesses are saying it is just as bad as if there was a full lockdown. And I simply don't know how much longer these tourism businesses and these hospitality businesses can keep going like this. But what are your thoughts everyone? Let me know. But it's not only this one company that's going to be hit everyone. Listen to this. Genting Hong Kong is part of a bigger conglomerate that also includes Genting Malaysia and Genting Singapore. Among its assets, the conglomerate owns Resorts World leisure park chain, which includes those in Singapore, New York City, and the United Kingdom. It also has 30 casinos across the UK. So we can see here, it's not only going to hit its business in Hong Kong and in China, it's also going to affect its businesses in New York and the UK as well. And I've been having people asking me, well, when is the financial crisis in China going to hit? And I'll say, we're already in one. We're seeing companies going down every single week. We're seeing property sales and property prices in China tumbling. And now let's look what's happening with China's stock market. Look at this everyone. China's stocks dropped to 5-month low on property rout and also the pandemic issues as well. Now I'll bring up a chart here of China's CSI 300 index. This is kind of like the S&P 500. This is China's top 300 companies by market cap. Now we can see here it hit a peak in February and we can see here it has been falling and it is now down 17.9%. So it is now approaching bear market territory, and I think once it falls 20%, we'll start to see the declines accelerate. And also their economy is slowing as well. It says here China's slowdown probably extended into the end of 2021, with growth falling below 4% year over year in the fourth quarter, according to Bloomberg economists. Now you may think that's good growth, but that is actually terrible growth for China. They are normally growing at 8 to 10%. And with China slowing down, that's definitely going to be bad news for Australia, and it's also going to be bad news for the US, who are two big trading partners. But what you're probably wanting to know is, what does this mean for you and me in simple terms? Well, what this simply means is what's happening with China, what's happening in the global economy is we are starting to see things deteriorate, and we are starting to see defaults from the pandemic finally start to materialize. We are seeing the stock market and the financial system in China is weakening. So I think it's just a matter of time before we find out how bad it really is, or if we see there's another offshore bank that's been affected by losses from these Chinese companies. Because we all know China won't give us the heads up. We'll only find out after it happens. So everyone, that's a quick update with what's happening with China, what's happening with China's stock market, and the defaults happening. What do you think about this? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.